I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the Pink, symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk to you. It's been interesting 2 weeks. We had a little bit of a rally in the election in the United States, a gap up the next day, a big rally, 500 points to the Dow, and it all just completely fizzled out. And today, as we're speaking, oil prices are down 8%.
Now, is there a major reason for that, or is this just market reaction to the fact that usually in the winter months the price of oil goes down?
Well, I'm looking at the headlines, and the explanation is an expectation that I mean, this is kind of simplistic stuff, what they're saying, but more less demand and more supply. And the reason there's going to be more supply is the sanctions on Iran are not biting as much as people expected. Iran is shipping oil to China, to Russia, and other countries, and demand isn't growing. If anything, it appears to be shrinking a little bit globally. And a warning sign that this was going to happen came in the summer around June, when the global yield curve for the bond market, the global bond market inverted, which is the most reliable indicator of a recession that there is. And the global markets went and tipped over. They fell bad June, July in the bear markets. China, of course, fell really bad. Turkey blew up. But those were symptoms of a global picture. The U.S. market, though, was held in there. It made new highs in September. Our yield curve did not invert, although it's heading that way. It hasn't inverted yet, but the U.S. stock market definitely took a hit. So my suggestion about how to interpret all this is the global markets are saying we're heading to a global recession next year. The U.S. economy is still stronger than the rest of the world, but it'll probably follow by the end of next year. And this is probably why oil has dumped. It's probably why we're seeing more stock market volatility. When we last spoke, I talked about the stock market probably doing some sort of bounce around the election and then trending sideways into the end of November and then rolling over. I'm speaking the U.S. stock market into the end of the year and going back down to the October lows, and really that would be the moment of truth for people, because everyone is really still bullish on the market, predicting rallies in the end of the year. That's what I'm seeing on CNBC, and investors aren't really worried. Frankly, the market hasn't fallen that much, and as long as we hold the October and March lows on the S&P 500, people aren't going to worry. They're going to hold on to their stocks. They're not going to really try to change anything that they're doing. And even people trading the market, they're going to keep just trying to buy gap ups. And it'll take a break of those lows to make people shift and figure out, okay, I got to do something different here, and and so forth. But I think people should think of that ahead of time and not after it happens. And that's what I'm trying to alert people in interviews I'm doing now.
Well, OPEC just announced today that they expect world demand for oil next year to be down as well. That doesn't help oil.
No, exactly. And that's what's going on. If they're expecting demand to be down, that means people are using less oil, they're using less energy. That means the global economy is not booming. And, there's a slowdown of some sorts going on in China. I can't really put my finger on economic data because I think China is like a black box. But their financial markets definitely have been falling, seemingly to factor in a slowdown. I'll add, though, that other commodities also have not been rallying and have been sluggish. Agriculture commodities have not bounced in a meaningful way at all this year. They're near their lows, too. So, if anything, I would I think the slowdown or the drop in oil and sluggish action in commodities in general would suggest we don't really have an inflationary threat ahead of us. If anything, there's a risk of deflation over the next 6 to 12 months. So in one sense, I think that will probably limit the number of interest rate hikes that we're going to see from the Fed after this December rate hike. So we're probably at the end of the cycle there, which probably should be bullish for gold and silver. They appear to be in a sloppy bottoming formation, and once we get the last rate hike in, I would expect them to break away from this turmoil that we're seeing, or volatility. The word turmoil might disturb people too much listening to this, but volatility in the financial markets. And I think we saw a glimpse of that in October, where the S&P 500 dipped and gold actually went up the first 2 weeks of October as the stock market fell. So I think that's the kind of action we can look forward to starting at the end of this year or next year. So even though, it might be negative on commodities in general, and we're looking at oil falling, I do think there will be places to invest next year that are going up, even though they're going to be fewer than we see now. I mean, it's been the past couple of years. You can just throw money at any technology stock, the NVIDIAs, the Facebooks, the Googles, and expect to make money, and we're no longer in a market like that at all.
Well, is this the time now for people to kind of withdraw and then wait for bargains on those red hot or former red hot stocks?
I think so. I really believe that's the case. Now, most people disagree, honestly. And if you turn on CNBC, they're talking about end of the year rally, and anyone listening to that will say, well, I'm not going to sell because these people are telling me there's an end of the year rally. Well, my suggestion is to mentally prepare then for what you would do if the markets do break the lows of October, because that would prove that the experts are wrong, and the idea that these stocks are great buys or great holds are wrong too. And people should then, if they're unwilling to do it now, at least do it then and take some money off the table, off these technology stocks and anything really not acting well. And prepare to buy at lower levels and look to shift into pockets of strength, which I think will be, next year gold, in the mining stocks. But right now, there are pockets of strength, in utility stocks. Some of them have made new highs. Stocks like Coca-Cola have made new highs recently. Some of the drug stocks have made new highs, such as Procter & Gamble, Pfizer. But these are all defensive stocks that tend to go up at the very end of a bull market or the start of a bear market, because people think, well, these stocks are immune to recessions or bear markets, because look, no matter how bad the economy could get, people are not going to stop taking their prescription medication, and they're not going to stop eating at McDonald's. If anything, more people are going to go to McDonald's during hard times than good times, because McDonald's food's cheap. I mean, you can go to McDonald's and get a meal cheaper than you can at the grocery store. So McDonald's stock, is that's where the strength is of the stock market. That should tell us something.
Yeah, McDonald's and 7-Eleven hot dogs. I'm looking forward to it.
Well, that's not what I want to do, but I do eat hot dogs. I will say that. I do eat hot dogs. 7-Eleven hot dogs aren't bad. I just hate McDonald's food. I hate it.
We'll have more with Mike Swanson right after the break.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the pink CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Mike Swanson. Mike, if oil has gone down, are people looking at other sources of energy like uranium?
Well, the uranium markets are interesting. They have had a bit of a bounce here over the past couple months, and I would keep my eyes on Cameco and see if it can break out. It actually made a new high for the year just a few weeks ago, and if it can base here and digest that move and go, let's say, above 1275 by the end of the year, then we can finally get a nice, I think, rally in the uranium stocks. They kind of trade with the mining stocks in general, so it is something worth keeping our eye on, definitely.
Now, one of the ironic things in Canada, when the price of oil goes down, the price of our gasoline goes up because we have to buy it in U.S. dollars, and the Canadian dollar is tied to the price of oil. So we tend to pay even more for our gasoline, even though oil prices are low. Is that hard for somebody looking into Canada to understand?
Yeah, that's the first time I've ever heard of that idea, but I can understand why it would happen. It surprises me because I've always thought of Canada as this giant oil producer, so you ought to be using your own oil.
Yeah, how about that? Well, if you're buying Western Canadian crude oil, it's worth $50 less than the world price of crude. You would think Canadians would get a break at the pump, but then we have governments that are very greedy at tax time and tend to hit you pretty hard there. In fact, I think Canada's the only petroleum-producing nation that penalizes its own citizens.
Well, this is the fact I've learned today that I didn't know.
On precious metals, we haven't talked about platinum for a while. Is it doing anything?
Yeah, it's been kind of trading with copper and silver. Let me load up the chart of it real quick because I actually have not looked at it in 3 weeks. But yeah, it's basically trading along the others, silver and gold. And I've had the thought, actually myself, that I've been someone that primarily buys gold and silver. And as we come into this new cycle, which I think will be bullish for all the metals, I've actually considered I shouldn't just buy gold and silver. I should actually buy platinum and palladium and maybe a little bit of copper, but especially platinum and palladium. And the reason why is because they actually tend to go up more than gold and silver do when they, get into their final big runs. So I'm actually considering having more of a diversified metals portfolio where you would own several of these and not just two.
We'll have more with Mike Swanson right after this.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, marijuana in Canada is flying off the store shelves, and there's an undersupply of it. The stores can't keep up with it. Has that affected marijuana stocks?
Well, the marijuana stocks have such a tremendous run, and they finally had a new move to new highs in September. and then had a violent pullback in October. So, for instance, Canopy Growth, the U.S. ticker fell from close to $60 down to $32, along with the U.S. stock market. Then it bounced when the U.S. stock market did, and now it's pulling back again. I really think these stocks probably are just going to trade with the U.S. market, and they're disconnected with what's really going on in the stores and their earnings. And one of the reasons why is because they went up so much to the upside that from a valuation perspective, they're almost like the internet stocks were back in the 90s. So I don't really think necessarily the fundamentals matter that much, and there's so many Americans that got into these stocks over this year. They have no clue what the fundamentals are. They just chase price action. For example, if you go look at Robinhood.com, they have a trading app where you can open up an account and you pay no commissions, and they have just as many accounts as E-Trade, Ameritrade. It's a booming online broker, and you can go in there and see the top 100 positions owned by people, and a bunch of them are marijuana accounts. I mean, marijuana stocks. And these are people engaging in speculation, and they were doing great when these stocks were going up until the last few weeks. So I don't think the people buying this using Robinhood, and all they look at is the ticker. They have no idea what the fundamentals are, or even where the stores are, what the companies are even doing. These are the kind of people in the stocks, and I think that's a problem. They're going to have to get out before these things take off again. And I think they're the problem with the stocks. It's the Americans that bought without any clue what these things really are.
With Jeff Sessions out as Attorney General, are Americans more optimistic that marijuana will become legal federally?
I don't know if they should be or not. I mean, the election last week, that was a theme for a day or two, and it did help the marijuana stocks go up because Sessions got fired, and he's one of the biggest opponents of marijuana I've ever seen in my life. It's almost ridiculous. But that doesn't necessarily mean that the next Attorney General, whoever it's going to end up being, will be any different. And everyone's got to realize that Donald Trump's political base, much of it is made up of religious fundamentalists who hate marijuana too. In fact, that's what Jeff Sessions came out of himself. So I don't know if he'll go against those people. I mean, they donate and come out to vote for him, the Jerry Falwells and so forth. So I don't know. We'll just have to see what happens. But I do think it is inevitable that the picture will be brighter for marijuana as time goes on. It's just an overall trend. Whether that takes a year, 2 or 5 or 10 even, I don't know. But I do think it is inevitable in that sense.
Well, the Mexican Supreme Court just made marijuana recreationally legal in Mexico and in Canada. Back in 1975, the Jourdain Commission recommended legal pot. So when you say inevitable, well, yeah, it could take, half a century to do it, but it could happen.
That's politics, though. The good ideas, that seem sensible, they take a long time, but you can start a war, do something crazy, just like that. You scare enough people. So that's the problem with the marijuana thing. The people against it, you can scare them into saying it's dangerous, it's going to do all these bad things, give people brain damage, and people believe it. But the positive message about it, that doing this can eliminate a lot of criminals from the jail that's wasting money, or by decriminalizing it, you can put more real criminals in jail instead of people just using dope or something. I think that the message of benefits is often more difficult to sell than the fear message.
Yeah, I believe here in British Columbia, about 90% of people in provincial jails, which means they're serving 2 years or less, 90% of them are there either because of drugs or alcohol.
Oh, yeah. It's the same thing in the United States, or they're paying their child support. So it's usually because they're drug addicts, probably.
Exactly, all those things. Mike, anything else you think we should be looking at right now?
Well, I just say, we're doing this the second week in November. We're going into Thanksgiving, and historically, Thanksgiving week actually is the best week of the market, or the week of the year it's most likely to go up. So I wouldn't be shocked if there's not some sort of bounce into Thanksgiving, and it's really after that I think is going to be the most interesting time of year to see how the stock market's really going to resolve itself. The bulls, if they're right, we bounce into Thanksgiving and pause and break out as they predict. But I think they're wrong, and therefore December will be a critical month to see who is right, me or the bulls. And I'm willing to admit when I'm wrong and adjust my positions to match what the market's doing. So we'll see how these things turn out.
Mike, have yourself a great Thanksgiving. In Canada, we have it a month earlier, so the turkeys, I guess, are a little bit bigger by the time you get to them.
Yeah, they're waiting to be eaten. They're too big.
Thanks a lot, Mike.
Thank you. Great talking with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike or any of our other guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.